Are you struggling to know and understand why you need to buy property? Well, this is a video for you. Let's go.
And his name is
Hondo Kim. All right, with all that silliness out the way, let's jump right into this video. We are looking at, first of all, why do we need to invest in property? Okay, why do we need to invest in property? Well, what we're going to look at now is look at the performance for property over the last 30 years in property. As you can see, since 1992 to 2022, this is how it has been doing in terms of combined capitals and units, houses, and obviously the regionals and then the regional units. So obviously, the houses actually perform a lot better than units, but here you have it, guys. It's obviously that's the global financial crisis right there. Just a little dip right there, and obviously over the years it's done really well, and that's why we need to get into property. Over the long run, it's going to actually treat you better, and this is just on capital value. This has not factored in the rental payments that you would receive. That's why real estate is really important. Now let's compare that with stocks, okay? Because stocks is a valid concern. Like some people say, no, stocks is better because you can get into it right now and there's a lot of money to be made, and maybe that is right. Have a look at the average yearly return is about 10% per year. Okay, so that means you're going to be making 10% on the dollar every year, and that's pretty good. It's done really well. But I'm going to talk about why that is super easy to beat, okay, by looking at what kind of things make property so special, and one of those things is obviously cash flow. Cash flow is so important. That's why I've put a little crown there, because cash flow is king. Cash flow is king, especially if you're young and Aussie. This video is catered towards this market, and so we're gonna have a look at why real estate is king, because real estate is the king of investments, because it actually provides you with cash flow, and it's going to get you started with very little money. And here are some of the key terminologies that we're going to look at today. All right, we're going to look at some of these key terminologies today. All right, let's say we have a property. Okay, we have a property, say about $100,000. Okay, and you might tell me, well, $100,000, that's very cheap for a property. And you're right. You cannot find $100,000 properties anymore, and that's probably the reason why you have so much of that frustration. You're just sitting there going, well, how am I supposed to buy properties when they've got another zero on there? Like, it's like the real estate agent has just gone past the keyboard and just sat on the zero, and that's what they're putting up as prices. It's ridiculous. Okay, but let's just say we're getting a house for $100,000. What is the rent on a house like that? Well, we can find anywhere between none, right, to, you know, because you can't rent it out, all the way up to say about 7 to 8%. All right, and yeah, they're pretty high. That's a pretty high return, but we need those returns for the strategy that we're going for, where you're gonna have more cash in your pocket than not. That's what we're gonna need to do that. Okay, we're gonna need to find these returns. Okay, so we're gonna look for a house. It's $100,000, and we're gonna rent it out at 7 to 8% return. That means, let's say we're gonna get $7,500 a year. Okay, that is the rent that we're going to collect. Okay, I want to put everything in green boxes with the money that we're going to receive. Okay, we're gonna spend $100,000, and we're gonna collect $7,500, clocking in a 7.5% return. Okay, so that's exactly 7.5% return. That's what we're gonna get. Now, if that's 7.5% return, obviously that's not going to do so well with, you know, that's already coming short, because stocks, we're coming in at, you know, plus 10% yield every year. Okay, around about that. So we're still short. All right. Be that as it may, what we're going to now look at is we're going to look at how that house purchase relates with the down payment. Okay, we're going to look at some of the key terminology, such as down payment and LVR. Okay, LVR stands for loan to value ratio. I am about to do a video where I go to the streets and just interview a whole bunch of young people, and I'm going to ask them, what do you know about the LVR? LVR is a difficult way of asking, do you know how much of the property you can borrow? How much of the property can you borrow? That's what we're looking at. Okay, and that's usually a percentage, guys. That is usually a percentage. Okay, that's usually a percentage. Okay, and that percentage is roughly about 80%. That's how much people will borrow up to. So when they're buying a $100,000 property, they're gonna have to borrow 80% from the bank. So down payment is what you will then have to come up with cash. That's gonna sit roughly around about that $20,000 mark if you're going to borrow, if you're going to buy a house for $100,000. That's the $20,000 you have to come up with, and you have to borrow 80%, which means then from the bank, and I'm gonna add in this word here, loan. Okay, we're gonna get a loan of approximately about $80,000. Okay. Now, how much do loans get? Okay, well, what do we have to pay on that? What is a liability attached with that loan? So if you get an $80,000 loan, okay, a loan is $80,000. How much repayment do we need to make? Repayment. What is the interest? Is the question we have to ask. The interest rate. So if we look at ANZ's website right now, I'm not saying go and get finance with ANZ. You should always use a broker. Is they're coming in at 5.5% per annum? Okay. Should you wish to borrow 80% or less of the property value? 80% or less of the property value. That is how much it'll cost to borrow that money. So interest at 5.5%. Well, that is. Bring a calculator. 80,000 times by 0.055. Okay, we're just paying interest only. $4,400. Okay, so interest is sitting in at $4,400. Okay, $4,400. That's the interest. Great. So that's what it's going to cost us to own this property. Every year, we're going to pay $4,400. Now, if you don't make $4,400, that's a problem. But have a look at this. You're collecting rent. You're collecting rent. Ka-ching, right? At $7,500, right? And we're going to teach you how to look for these crazy high rental yields. Okay, we're going to look for them. We're going to look for them together. Okay. And so we're getting these kind of yields, and that's how much it costs to service the loan, right? Then the difference, right? Difference is going to be 7,500 minus 4,400, so 3,100 per year. So by owning this property, right, you're putting that money in your pocket. Now, what is the actual money that you put in? It's this down payment thing here, right? That is the actual money that you put in. This is the money right here. Okay. So then let me ask you this. What is 3.1 thousand over 20,000 multiplied by 100%? That'll get you the yield return. That's a rate of return on your investment, right? I'm gonna get rid of my face so that you can see these numbers because they're more important than my face, right? So that works out to be on a cash on cash return, right? 3,100 divided by 20,000 is 15.5%. That there is a whopping 15.5% cash on cash. COC is what we call them, cash on cash return. That is just on cash yield return. That's just income, right? This cannot beat it. This cannot beat it. Stocks cannot beat that whatsoever. Of course, we have to take out rates and taxes, and then we can do a net calculation. But rates and taxes for something like this would sit roughly around about, I don't know, $1,500 a year. So even if you take that out, it's still sitting very, very, very pretty. It's amazing return. And plus, there is value add. Value add could be by way of doing renovations, or values can be added just over time of the property itself. So let's say after 1 year has passed, the property prices goes up 10%, right? Which is not a crazy high gain, or even up just 5%, which is just, average these days. So you're making anywhere between $7,500 to $10,000 on your capital gains. If that was the case, along with that and the income that you're making, the returns are completely out of this world. And with the extra money that you are getting with the difference, you can then put that towards your serviceability and your down payment for your subsequent houses. And that's how people make money with property, guys. Of course, we need to go and find these rates. Okay, all right, fine. Okay, so we're going to look at this property in Adelaide, okay? Since you guys don't believe me. $270,000, $290,000. Okay, it's not a $100,000 property, but dang it, that's a pretty good price, right? You don't have to be around this property all the time, and it's a pretty new home, so you don't have to actually worry about all the maintenance and things like that. It's going to be pretty self-sustainable as it is, right? Just as it is. How much would a property like this get rented out for? Well, it's going to get rented out for $410 a week. It's a similar property in the similar location. So if we look at 410 on $270,000 purchase, right? So we've got 410 multiplied by 52. That's how much you're going to collect in terms of rent. And you're going to put that on, instead of 270,000, you're looking at multiplied by 100. You're looking at 7.8%, right? That's amazing return. That's an amazing return. That's already coming to realize how realistic this can actually become, right? As long as you prepare the down payment and then you can go on with this, you can actually create income that will start generating on its own. And you have to actually find good properties that's going to be able to do that. Now, I am developing a course for you guys to know exactly how that works. If you guys don't want to sign up to the course, that's fine. I'm not going to force anybody to do it. The course is not on pre-sale even. It's just, if you're interested in learning about this course, if you would like to get exclusive pricing on this course, please leave a comment down below. Comment real estate. If you comment real estate, I will then give you some exclusive pricing once the property course becomes available. I have more than 15 strategies that I can share with you on real estate. This is how I became financially free. I also have a property podcast that I'm starting with Mr. Charlie Aylers. You might know of him. He is a TikToker that is from Australia. And he is he's a brilliant TikToker. He's all into investments. He's about the same age as me, and we both share similar ideas on how we can invest and how we can get ahead in this crazy marketplace we are in right now. We're going to be doing we've already recorded a couple of episodes together where we're providing tons and tons and tons of value for you to capitalize on in this Australian property and finance market that we're in right now. If you are young and you want to make a difference for your future, this is highly recommended. But in the meantime, make sure you go like, share, subscribe, and ring that notification bell so that you can stay updated with some of the best ways to get rich as a young person with very little to invest. Let's go.